Hello traders, this is StrayDog's weekly video, and as always I will cover 4 indices here: S&P, Nasdaq and Russell, US indices and German DAX. So these here daily charts of those indices, and important things now that the G20 meeting is over. The G20 meeting is perceived as a positive thing for market, and we already have market indications of the possible gap up on Monday. And this week is going to be a shortened trading week in the USA due to the Independence Day, so we are going to have an early close on Wednesday and markets are going to be closed on Thursday. What that could mean for the market is that possibly on Monday and on Tuesday we could experience higher level of volumes and trading, and then starting from Wednesday the volume and market activity could deteriorate because I can only imagine that plenty of market participants will take Friday as a day off, so they could go on Wednesday afternoon on a possible long weekend trip connecting Thursday, Friday and the weekend. So that is about the next week, and we also will have some important news. On Monday we will have China Caixin manufacturing PMI and US manufacturing PMI. Then we'll have OPEC meetings on Monday and Tuesday. On Wednesday, ADP non-farm employment change and ISM non-manufacturing PMI, and of course Friday, as always, as first Friday of in a month, we will have the NFP report and unemployment change. Now let's go to the charts now. I will start with the monthly chart of the US indices first, and this is the S&P monthly chart. At the end of May, S&P was looking like this, like we could get some continuation of this move, given the fact that May closed, the candle closed at the bottom, but we didn't get anything out of it, only this small tail that was the first trading day of June, and after that we basically got a sideways up grinding that completely negated the month of May, at least on the S&P. On Nasdaq it lacks a bit for negating, and Russell still lagging behind. Now let's observe this same thing but on the weekly charts. I said in previous videos, this up scenario was a higher odd scenario last week and on the previous week, and those kind of higher odd scenarios were played, and now market is again here in this area that represents the all-time high on the S&P with the possible projected trajectory into this trend line, which could lead us to 3000 to 3030. So the very same scenario as it was on the previous week and in the previous videos. S&P is the strongest index so far. The others are lagging behind, so Nasdaq has some room still to go to the all-time high, and of course Russell still has to find the strength to catch up and to move above this area here, which is now the most important resistance for quite some time for Russell, around 1600. What we got on Russell this last week, when it was performing better than the S&P and the Nasdaq, was the Russell rebalancing. So some companies on both Russell 1000 and this is the small cap index, Russell 2000, some companies were out of the index and new came inside the indexes, and those rebalancing was also one of the reasons why Russell performed better than the S&P. Now let's go to the lower time frames. This is of course daily chart, just to observe what kind of look we have here. So after this big move to the upside with smaller pullbacks, we finally got this one and it was a false break of the daily 200. It was a pullback that nearly touched the fib retrace 38.2. It lacked a few points here, and market just continue after that to go higher. And now this, when you see this, which was basically a double top here, but now a smaller pullback, just 2 days, and after that swiftly going above, that is market is signaling that likely it wants to go higher, that likely the new all-time highs are the higher odds to see a new all-time highs than to see a rollover, and again maybe testing this here support, or maybe even go to here to daily 200, or to make some kind of double bottom here, because now we have a good support zone around here. So again, higher odds scenario is breaking higher on the US indices. They all pretty much look the same. Look at this, how they touched this previous resistance, then that got broken, now act as support on Nasdaq. And just observe that all of these indices, Russell including, which was a lagging index for many months, that now they are all above daily 50 and daily 200, which we can use as a gauge of the market strength. And if we are going to observe this on 240-minute charts, there also we got these really simple trading setups, and whenever you have a shallow pullback that market reacts on it, it is a sign of strength, because this pullback was nowhere near the first significant fib retrace, which is of course 48.2. They got the confirmation on G20. Again, not anything conclusive there, but good enough for market to push higher and for market participants to use this to squeeze more short sellers, especially going into a week where you could expect this last 3 days to be days with a lower liquidity. Lower liquidity meaning lower amount of volume, meaning lower amount of market participants equals easier to push market in the desired direction. And the same goes of course for the Nasdaq and for the RUT. So that is it about US indices. They all point to the higher odds scenario of continuing to go higher. And of course you could look at other information as well. Call put ratio. This is a US trader named Mark Eckleberry that I like to follow, and he said that in terms of sentiment it is a lot of bullish bets going into the weekend, and the equity put call ratio is at 0.55. Then that indicates complacency, and now we are again in that same market cycle when market is complacent. The market has no worries at all, that just pushing higher, and as said before, they're probably going to use this lower liquidity period to push market higher, because it is easier to push market higher in the holiday week. If you want to see some other market patterns, you could also look at, for example, this. This is another trader, Matt from Germany, that I like to follow, and he asked, do you see a cup and handle pattern here? But whenever you see this like a resistance, and now the amount of time between these two tests and down, now this as a second and third is shrinking, you must think that this market is signaling you that it wants to go higher, that it is ready now to make a breakout attempt. Now the other thing is that the breakout attempt is going to work or not. Are we going to get a real breakout above the all-time high or a false one? And you cannot know that in advance, and on Monday we will have more market information. There could be a gap up, and with just gap up they could go immediately into the all-time high territory, and now here in this area where there is nothing to the left of the market information, you could just make yourself a trend line like this, or use fib extensions to gauge where this market could go if it goes higher. So that is about US indices. Let's go now to DAX. Okay, so this is DAX cash index chart, a weekly chart, with the obvious here resistance around 460. On a daily chart it is looking like this, and now again similar situation like on US indices. Former resistance that got broken and now acted as support. Market spent small amount of time below 12,200, and the move went just a couple of points below it. Now we are here again, and the same thing as on US markets, possibility of gapping up above this, and that this, in case of the bigger movements to the upside, could act as support. All of this that could be now a broken resistance, with first target is here, this stop here around 12,600, then we got this that is near 12,900, and so on into these better areas of resistance like here and here at the all-time high area. On the 4-hour chart, maybe we can observe this even better. So for the buyers, there were only two pushes to the downside that could be used for swing trades. Of course, that would mean to take a weekend risk and to risk a negative outcome of the G20 meeting. But as on the US indices, pushing inside this zone for first time, and now we got this, and the distance between the test is shrinking, all signaling market strength and market willingness to attempt a breakout above this. And final thing to observe here on the DAX charts are the DAX cash index daily chart with the unfilled gaps, to observe where are those gaps that are now close to the price. So below this resistance we only got this gap from Thursday, and above the resistance we got these gaps from dating from August 2018, with the closest one that is just above this resistance, as you can see, on 12,494 is the first one. So that first one could be the target, could be filled on Monday. We shall see about that. Also, this second one is not so distanced, because we can observe what the current daily ATR is currently around 150 points. So both of these gaps could be filled on Monday if we are going to see a gap up and continuation of that move. So Monday is going to be very important, very interesting. And also you can observe this market in form of another cup and handle like this. So that is it about DAX, and if you are interested in DAX trading, I'm inviting you to check my site. Here it is, StrayDogTrading.com, and on the homepage of my site you can see what kind of service I'm running. It's called Daily Dose of DAX, and what I'm offering here for DAX day traders and swing traders. So that is it about DAX and US indices in this video. I wish you a good weekend and good trading.